Sometimes it's the fault of the people we speak to. We talk as if there is this special tap down in Texas that you can just go down there and just turn, and all of a sudden crude output is up. Talk to us about how difficult that effort is, if we even tried to.
Well, I mean, it's even basic labor, but, then if you get into engineers and just the ability to add capacity is being wildly exaggerated here simply because there aren't the people. And as Tom has referenced, Midland is kind of in the middle of the desert. In fact, it is in the middle of the desert. And there's tremendous competition from Austin for both labor and engineers. And so just in people terms alone, for commentators to turn around and say, the U.S. E&P industry should add capacity and volume is completely misguided. I was in Midland in late December talking to the service companies, talking to Diamondback, a major E&P there. And the fact is that things are drum tight prior to this crisis. And yes, they could add on a one-year view, but there's nothing they can do this week.
Paul, they are damned if they pump. Environmentalists criticize them and investors punish them, and they're seemingly blamed if they don't. Paul, what do you make of the relationship between the administration and the oil patch in America at the moment?
I mean, absolutely appallingly badly managed because, of course, as you know, they came in with almost no oil expertise on the basis that they would change the energy system. I don't know how you can change the energy system without oil expertise. And now you're in a situation where you're talking to Venezuela, you're talking to Iran, and you're basically pretty much not talking to Texas. So it doesn't make any sense whatsoever.
Paul, how much could they actually, though, influence the output in Texas quickly, given the fact that there has been a lack of investment, given the fact that a lot of this has been driven not by Washington, but by a lot of the shareholders that have looked for fiscal discipline?
Well, the point that John highlighted from my research yesterday was that if they try to aggressively increase capacity now, they're simply going to compete with each other. And Tom also picked up on the point, you're just going to inflate things more because all you're going to do is take the guys from the next door rig and put them on your own rig. And the list goes on because it's not just about people. It's about steel. It's about cement. It's, well, as they would say, cement. It's even about sand, actually, at a given level. So there's just all sorts of tightness down there because we know we were in a commodity squeeze already before all this happened, which is why it's so dramatic. The answer is, if you really started to reorganize towards more capacity, you would begin to see an impact towards the end of this year.
So, Paul, what could this administration do? What would you like to see them do in order to support more domestic production as opposed to going to Venezuela, as you point out?
Well, the grand scheme, as you know, is nuclear with a new grid. But of course, can we do that? The utilities don't really want it. The utilities have a lot of vested interest and don't get the criticism they should. Nor does Amazon get the criticism it should for, the amount of oil that's used to deliver a package to everyone and return half of them. All of this stuff is not really examined in the grand scheme of things. But above all, what the industry wants is consistency. So one of the latest things that we're seeing is suddenly they're saying we'll reduce the federal gasoline tax. Totally idiotic, just in terms of environmental friendliness and not encouraging efficiency. What they're saying is we'll take off the stupid mandate for ethanol being used. Again, just as the industry is moving towards major investment in renewable diesel, the administration says, actually, we might have to change this because there's a crisis. Right. It's a crisis management, and that's exactly what leads to what I call the energy regression. We're in an energy regression. We're going backwards.
Paul, let me go to the third rail, and it's not the expensive summer camp. That was the third rail this weekend. Let me go to the third rail of the Keystone pipeline. Is it a valid economic project, and can it actually enhance United States energy independence?
Yes, I mean, it could, and absolutely more Canadian oil is an obvious outlet here to as a long-term solution, because obviously we have such a tremendous ally right there with the available oil, who, by the way, are doing a tremendous job of Scope 1 and 2 emissions reduction. So yes, that shouldn't have been delayed back in 2015, which was when the Obama administration first threw a wrench in the works. Actually, the Biden administration was just bad messaging, because by then the project was pretty much dead, insofar as the Biden administration canceled it as literally the first thing that they did. But yeah, you could easily resuscitate this stuff if you could get around the environmental opposition. Environmental opposition is local. It's a problem of negotiating very specific issues. The latest one has been this Mountain Valley pipeline, which would release more U.S. gas from the Marcellus into the general U.S. economy and to export. And that's 96 complete with $6 billion sunk. And a federal judge blocked it for crossing the Appalachian Trail. Stuff like that just makes no sense environmentally.
Paul Sankey, gasoline, AAA unleaded from 360 out to, I believe, 407 in 7 travel days, if you will. In your head, where is the tip point on AAA unleaded where it really begins to affect our behavior?
450, so 450 nationwide, but then you add 60 cents to, well, that's the retail price, but then you have to add $1 in New York and $1 in California, in the higher tax states. So you're going to get to 550. And by the way, that's in the post. That's going to happen because essentially the gasoline price is trailing the crude price, obviously quite severely.
So what happens when we get to 550?
Well, people change behavior quite radically because obviously there's a lot of discretion over how much you drive your car, which car you drive, or whether you drive like a crazy idiot or, very conservatively, whether you pump up your tires. We saw all of this in 2008, Tom, and, there's actually quite a significant ability to change behavior. What's interesting now is obviously that you have very low unemployment, and therefore people do need to drive. And so I think the elasticity here is going to be pretty sticky, to say the least. And I think we'll get to really significantly higher gasoline prices are absolutely guaranteed.
And Paul, that's the test. And I think this is really interesting for you and I to try and talk through, work out. It's an open question. In the Treasury market, when yields go higher, aggressively higher, we talk about how self-limiting a sell-off would be because it starts to bite the US economy and yields come back in. Does the same dynamic exist in the commodity market for crude? And I'm trying to work out what that might mean for, say, the likes of Oxy up more than 90% year to date. At what point do energy prices go too high for even energy equities to continue rallying with it?
Yeah, I mean, you get into the point of demand destruction. Obviously, Oxy was an outlier move because we now know that Warren Buffett was building a significant stake and seemed to want to do it entirely in a week. So, but generally speaking, if the market begins to believe the strip, which is now over 100 all the way down as far as the eye can see, then these things move higher, and it's really the back end of the price curve that matters, which is aggressively higher. I think because there's a total question mark over what Russia will look like in the future. I think there's two things here. Number one is that very good news this morning, Russia has softened its stance, and I think we see the markets coming back. Given that Russia is softening its stance, and maybe at the point of admitting defeat here, quite possibly. That's the good news. The bad news is we may actually see Russia now permanently out of the market, for multiple years, long enough to make a difference to the strip, at which point the future strip will be at 100, and these things are hugely undervalued against that. Once you get to 130, 40, 50 on a spot basis, obviously we worry about demand destruction, and really the big question here, and you guys debate it constantly, is what will the recession look like? It's not a question of whether we get a recession, it's like what kind of recession are we going to get?